Hi, this is Gerald Celente. It's Thursday, January 19th, 2017, and here are some of today's trends in the news. Well, tomorrow's Inauguration Day here in the USA, and I'll be doing an inauguration special on Alex Jones tomorrow from 7 p.m. to 8 p.m. That's right. So we're going to do a big roundup of what goes on tomorrow and how it's going to go. And on to today's news on the market front. Nikkei's up, but everything is down. Right across the board. Hang Seng, Shanghai, CAC, Stack, FTSE, Dow, NASDAQ. But oil's up a little bit and gold, beep. So what's going on in the markets? Well, everybody's waiting for tomorrow. I don't know what tomorrow is going to change, but that's what they're saying. U.S. equities closed lower on Thursday. And also, real estate falling around 1%. The U.S. dollar spiked against a basket of currencies on the back of strong U.S. economic data. Now remember, Trump says he's going to talk down the dollar, but he could talk it down all he wants. The dollar's going up if the economy goes up because they're going to raise interest rates. And when they raise interest rates, the dollar goes up and gold goes down. I think this is a pause ahead of the inauguration because there's so much political uncertainty, said Kate Warren, investment strategist at Edward Jones. We don't know what they will be focusing on first, meaning what the Trump campaign is going to be doing or the Trump presidency is going to be doing. Part of it is people taking profit off the table, said John Traynor, Chief Investment Officer at People's United Bank. We were surprised by the November-December rally, so taking profit off the table the day before Inauguration Day makes sense. I don't know why it makes sense, but that's what they're doing. I mean, what if it was 6 days before Inauguration Day? What difference does it make? But hey, in economic news, weekly jobless claims dropped around their lowest levels in 40 years. Housing starts spiked 11.3% in December, beating estimates. The Philadelphia Federal Reserve Business Conditions Index rose to 23.6, above consensus estimates of 15.8. So these are positive moves. Over there in Europe, Mario Draghi said at a news conference there's no sign of convincing upward trend of underlying inflation, so they've kept interest rates and monetary policy unchanged. U.S. crude settles up a little bit. How come? For no real reason, because U.S. commercial crude inventories rose by 2.3 million barrels in a week through January 13th, well above the expectations of only 342,000 barrel decline. So stockpiles are rising. They're saying there's going to be a little bit more demand next year, according to the Energy Information Agency, but we don't think enough to make much of a difference. Gold falls as dollar U.S. bonds rise on strong economic data. So there you got it. Actually, gold ends up just a little bit. Consumers fuel Britain's growth, defying forecasts. You remember what happened with Brexit. Everybody was saying how terrible it would be and how the British economy would go in the tank. Didn't happen. The UK economy performed better than most experts expected since June's Brexit vote, thanks largely to British consumers who confounded predictions that they would cut back on spending. The International Monetary Fund said it estimated the UK grew 2% for all of 2016, comfortably above its 1.6% forecast for the U.S. The pound, by the way, has fallen 20% against the dollar since Brexit. But as we look at the economy, nothing goes straight up and nothing goes straight down. As these interest rates go up in the United States, we forecast the housing market is going to go down, and you're seeing some signs of it. Increase in mortgage rate hurts expensive coastal markets. That's where the prices went up the most. So now you have these giant mortgages. So even if interest rates go up a little bit, you got a lot more money to pay. The average rate for a 30-year mortgage has risen to 4.12 from 3.5 before the election in November. So for instance, in San Francisco County, have seen the biggest impact of the rate jump with a nearly $375 increase in typical monthly mortgages. So that's, you got it. So again, as the dollar gets stronger and then we have to go overseas in the emerging markets, you're going to start seeing turmoil. Goes back to gold. Now, if gold starts slipping again below the 1,200 mark, it's going to test the 1150s. No question about it. But we don't think there's a big downside after that. If it stays above 1,200, again, going back to the emerging markets, they have $10 trillion worth of debt out there that they borrowed in dollars. Their currencies are getting weaker. They have to pay it back in more of their currencies as the dollar gets stronger. So that's why we continue to say that gold is a safe haven asset. Student debt picture darkens. This is a study done by the Wall Street Journal. They found the data revealed that the Department of Education over there, they underestimated things a little bit. The department previously had overstated the repayment rates for 99.8% of all the colleges and trade schools in the country. So what they're saying is this debt crisis is much worse, the student debt crisis, than is being reported. And remember, the student debt load is bigger than the credit card debt load in the United States. Hey, some positive news, but maybe not if you're in the coal business. China halts plans to build power plants fired by coal. China is canceling plans to build more than 100 coal-fired power plants, seeking to rein in runaway wasteful investment in a sector while moving the country away from one of the dirtiest forms of electricity generation, the government announced in a directive made public this week. Positive news. Again, you're going to start seeing more and more alternative energies, and the future is what it is. We still believe there's going to be a big breakthrough in the future that'll make coal and fossil fuels not nearly as important as they are today, beyond wind, solar, geothermal, and biofuel. Important story. Ross steps up anti-Beijing rhetoric, adding fears of a China trade war. This is Wilbur Ross, who Trump has brought in as the Commerce Secretary. Ross says, quote, "They talk much more about free trade," meaning China, "than they actually practice. China is the most protectionist country of very large countries." And he's 100% correct. You go into business in China, you want to buy a Chinese company, you can't buy all of it. But they could buy all of it here or anywhere else. This guy is going to renegotiate the policies in China. And he's starting off with NAFTA and then China. And if he works on our behalf, we believe it's going to be a very positive move. And moving on to some international news. Yeah, remember yesterday over there in Davos, they were saying that populism is now becoming a big trend. Oh, and it's only this year. And you know what that is.
Bullshit detected. Take precautions. cautions.
Again, we've been talking about this for years. And now, of course, it's just gaining momentum. Marine Le Pen is now leading among French voters. The leader of the right-wing National Front Party, Marine Le Pen, is gaining more support, leading with 25 to 26% of the vote, according to the latest poll by Le Monde. François Fillon comes in second with 23 to 25%. Right wing. If you don't agree with their BS, you're right wing. If you want to maintain your national identity, you're right wing. If you want to leave the European Union and break away from the euro, you're right wing. If you don't believe their crap, you're right wing. You wonder why they get it wrong at Davos and they couldn't see this coming? Why they couldn't see Trump's victory? Because their minds are so closed by the rhetoric of the crap that they write. And speaking of going back again, and to why we see gold being a foundation as a safe haven asset, talking about the emerging markets and the troubles with their currency and the troubles they're having again with the people running their country. Support for Mexican president plummets. The new poll published Wednesday gives the president a 12% approval rate, down sharply from 24% in December, and the peso is at its lowest level in decades against the U.S. dollar. You see where this is going? So now there's a rebellion against this guy. They'll call it a right-wing movement, rather than we got a loser running the show and the people are tired of it. And talking about losers running the show and tired of it, Biden takes parting shot at Putin and Trump in defense of NATO. Joe Biden has accused Vladimir Putin of attempting to whittle away at the European project. That's a quote in a speech at Davos. The vice president said he was in no doubt that Russia under Putin had sought to interfere in the U.S. presidential election, but can't provide 1 ounce of credible evidence. Hey, but that's Joe Biden. He's been BSing all his life. Mr. Biden called on the United States and Europe, quote, you ready for this? Lead the fight to defend the values that have brought us to where we are, a fight for democracy, a fight to reject isolationism and protectionism. Don't you protect our jobs? No, no, no. Why should you do that? You're the guys that sold them out, you Democrats. Yeah, under Clinton, you remember? Democracy, that's right. That's what you said, Joe, with Afghanistan. Hey, we got to bring democracy over there, don't we, huh? Yeah. Oh, and how about Iraq? What about Syria, Libya? They use this crap and they get away with it. You wonder why people are bailing out of the mainstream media? Populism? No, they're not tired of populism. They're tired of puppets like Biden that believe that they're the leaders of the world and we have to follow them. So while Mr. Dalio over at Davos yesterday, who I reported saying that populism is just going, you're with the the Biden crowd over there. He's talking to you guys. All you guys are in a bubble. When it comes to making money, I can't come close to these guys. When it comes to being like BS Biden, not even close. But when it comes to knowing trends, I could out-Trump Trump, I could out-Trump Biden, I could out-Trump Dalio. And you guys are out of touch with the real world. Because in the real world, they've had it with what you guys are putting out. Hey, like this. Facebook rolls out fake news filter in Germany to foil election hoaxes. As Biden talks about election hoaxes and gives no proof. And then finally, to show you how low the media is going, the New York Times has come out with a new story. The study calls for rapid change in newsroom. The report comes at a particularly sobering time for the legacy media. Legacy media, you got nothing here. The steep and continuous decline of high-margin print advertising has led to significant financial challenges for most newspapers. News organizations, including the Wall Street Journal and Gannett, have made significant cuts in staffing. So you know what they're going to do now? You ready for this? I'm not making this up. Among the recommendations in the Times report were reducing duplicate layers of article editing, and you ready for this? Having visual experts play, quote, the primary role covering some stories, part of an urgent call for more visual journalism. Isn't that nice? We'll cut, oh no, hey, no, a picture does not speak 1,000 words. You're getting rid of reporters, and what you're going to do is put out more stupid, ignorant pictures like this one. Look at this, the evolution of Obama. Oh yeah, red carpet, a red carpet. Roll out the red carpet. Yeah, it's El Prince, man. Yeah, in Los Estados. What's this red carpet crap and saluting these people? Hey, did you ever hear a public servant? Could you guys handle that? Yeah, visual, huh? Yeah. Do away with reporting and put out more bullshit pictures. Oh, hey, how about this one? You don't think that one was stupid enough? I got a dumber one for you. How about this for visual bullshit? Bill Maher isn't high on Trump. Who gives a crap what this guy thinks? The toilet paper a record. This is Gerald Celente, and that's some of today's trends in the news.